Energy demand needed to power AI data centers is expected to explode past our current capacity by 2030. The industry is now turning to Bitcoin miners as a new power source. Crypto miner CORZ announced a partnership with Nvidia-backed CoreWeave to host its computers. That was earlier this year. And more recently, activist investor Starboard Value took a significant stake in crypto miner Riot Platforms with the intention of steering the company in a similar direction with AI. With Bitcoin now holding over that key $100,000 level, how will companies balance these two booming industries? We've got a great guest to talk about that question, Adam Sullivan. He is the CEO of CORZ. And Adam, it's great to speak with you about this because you yourself started really strong as a Bitcoin miner. Now you've transitioned towards a little bit more of a data center AI play with HPC, high performance computing customers. Where do you see yourselves now? How would you define your strategy today, given the success of Bitcoin in recent months?
Yeah, I mean, it all really goes back to Core Scientific's roots. We were the largest Bitcoin mining company for the past 3 years. And that's really driven by the fact that we had to bring in traditional data center people to actually run the business. And so that's really been our differentiator. And so we think of ourselves as a digital infrastructure company, whether it's building data centers for Bitcoin mining or whether it's building data centers to host hundreds of megawatts of the GB200s that you guys were talking about earlier. Our core competency is driven through large-scale digital infrastructure.
So what do you anticipate the revenue split from AI customers to Bitcoin revenue looking like heading into 2025?
Yeah, for 2025, it's going to be a relatively equal split in terms of the two. But our expectation is to continue to grow the data center part of the business, which is just a radical shift from the high volatility Bitcoin mining space, moving into the data center space. These are long-term contracts that we're signing over 10 years, and it provides a lot of long-term and free cash flow stability that investors really enjoy. And as a CEO, I also enjoy that as well.
What kinds of clients are you looking at in that space?
It's mainly looking at large hyperscalers or large enterprises. So those two customers are the people that are looking for these larger sites. So think 50 to 100 megawatt sites. And so that's what's driving the demand right now. The other part that's driving demand are a lot of smaller customers, 10 to 20. But our focus right now is winning these large clients because that demand is so significant. And we expect that demand to continue into 2025. But these large scale sites that everyone likes to talk about, we think that is going to slow going into 2026, where you're not going to see hyperscalers, you're not going to see large enterprises necessarily looking for more large sites because they're going to have a number of these sites under development.
Absolutely. So given that a lot of these hyperscalers are investing in building up their own data centers, which ones are you going after?
Well, the thing is, even AWS, even Meta, even Microsoft, historically, they've even used outsourced data center providers. So that's one of the largest drivers of demand for the large data center companies. Think Equinix, think Digital Realty. And so we're still approaching that market today. It's a very attractive market, obviously. These are large investment grade counterparties. And so that is our main target area for customers today. Over time, we're going to be looking at more multi-tenant, especially as you referenced inference earlier. Inference is going to be a major driver, think 2027, 2028, where we have a lot of smaller data centers located in major metropolitan areas to help allow for inference to actually occur.
Is that confirmation that you're talking to those three hyperscalers that you mentioned, Adam?
I would say we're talking to many of the hyperscalers that are out there and many large enterprises.
Okay, fair enough. Had to ask. So it's fascinating because you have all of this infrastructure, but it's expensive to transition that infrastructure over to a data center. Obviously, how hard is that pivot and how are you kind of allocating capital around that pivot?
Yeah, so for our existing contract, this is actually a contract where our customer is actually paying for the CapEx. That really speaks to the demand for large scale sites today. And so as we look forward, we're deploying capital for a high performance computing center. So for every 100 megawatts, that's almost $1 billion in capital that needs to be spent in order to develop one of these sites. And so you just flashed a chart earlier, 15 gigawatts, looking at potentially 35 gigawatts of demand. That's something that is absolutely exceptionally expensive. That's over $100 billion in capital, looking more like $200 to $300 billion in capital that's being spent. And this is a lot of this is mainly driven by this GB200 shift, where traditional data centers are not equipped to host these new GPUs. And so that's why we're seeing all of this new data center growth. because it is a completely different form factor. We're looking at liquid cooled chips, something that hasn't been developed at scale in the past. And so looking forward, we expect to see more liquid cooled chips. And that's the reason why we're developing all of our infrastructure today for this newest generation of data center.
I want to end on policy. The incoming president-elect Donald Trump has talked about increasing energy efficiency and infrastructure to support the AI boom. I believe you've spoken with President-elect previously. What have your conversations about the outlook for energy infrastructure, specifically on policy, indicated to you about what the path forward under the Trump administration could look like for your business?
Yeah, the new administration is really forward thinking about firm generation power and how we can continue to develop new transmission lines to actually connect these large sites, these large generation sites, whether it's natural gas, whether it's nuclear, whether it's wind or solar. All of this is being developed outside of major metropolitan areas. And so we need new transmission lines. We need new firm generation power, think natural gas, think nuclear, to actually come onto our grid in order to support the long-term stability of the grid, not only for data center companies like us, but for all the communities out there that need firm power in order to power their AC or heat or whatever it might be.
Yeah, certainly a lot of energy requirements amid that AI boom as well. Adam, thank you so much for joining us. Appreciate it.